you're an early stage software startup, I would probably leave right away. Because I think the fact is that for most tech startups, if not all tech startups, traction is the only intellectual property that matters anymore. One question I like to ask, just to kind of prove this point, and it's not a trick question, why has nobody actually tried to beat Facebook successfully? Like why is it that nobody's been able to beat Facebook yet? Anybody? Thank you. That's fine. I would just say it's overwhelming traction, right? I mean, they have 1 billion monthly active users. That's just, I mean, that's overwhelming. That's not to say that nobody will disrupt them. They might. But the point is, it's incredibly hard to do that. It's much harder to beat that traction than it is to maybe, say, build a slightly better product. The next thing that's kind of underlying that change, or underneath that change of startups, is that capital is increasingly commoditized. It may not feel like this to many of you founders, but the reality is that there's more money available to you than ever before. It doesn't matter where you're based. It doesn't matter like what industry you're in or what you do or how unique your thing is. The fact is that there's more and more money available to you. So if you look in, for example, in the United States, we've got new legislation around crowdfunding. We look at Singapore with their NRF grant, which 5x's any money you have, generally speaking. We've got Startup Chile. The point is that none of these things really existed a few years ago, and money is getting more commoditized. I think actually this decade will be remembered as the rise of the angels everywhere. India, America, everywhere. It will be remembered as the rise of the angels. But I actually think it'll also be remembered as the rise of the entrepreneur. And that's because increasingly at the early stage, money follows you. In fact, the sort of subtle but very important thing for you all to remember is you don't need to pitch the investor. You don't need to pitch the investor at all. In fact, it's our responsibility to find the companies that have traction and put money into them. I think if more founders would spend more time, I don't know what just happened. We're going to put everybody to sleep here. But if founders would spend more time looking for traction in their business, you'd actually make it easier for me to invest. Right? Because make no mistake, any of the investors in this room, especially the venture capitalists like me and like some of the other firms that are here right now, not only do we want to invest in your company, but we have to invest. And if we're not investing in your company, you should be asking yourself why we haven't been able to connect the dots. Is it because you didn't communicate right, or is it because you really don't have anything? And then I think the most profound change that's helping, or that's driving the change for startups is that signals are everywhere. In fact, actually what I really mean by that is that transparency is everywhere. And the best way for me to make this point is to first give you an example in the public markets, right? So just to set the stage here, for those of you that are kind of new to venture capital, my industry, venture capital, is a very small piece of a larger industry called private equity. And some of those things are like commodities. So when you hear about oil and gold prices and all that, that's all part of there. When you think about real estate and all those other things. But the one I want to talk about real quick, just as an example, is Wall Street. Does anybody recognize these photos?
Amazon parking lot. I mean, Wall Street, Walmart parking lot.
Have you been to one of my talks before?
No.
Okay, new rule. If you've been to one of my talks before, you cannot answer any questions. Thank you, yes. Okay, yeah, these are pictures of parking lots at Walmart. Now, UBS, which is a large major bank, calls this, what I'm about to tell you, satellite parking lot fill rate analysis, which is a very fancy way of saying that they pay a satellite operator to take a picture of every Walmart parking lot every hour of every day, and then count the number of vehicles that go through the parking lot. Now, why is that important? You don't answer. Why is that important? What is it? Thank you. All right. So what it really is that if I know how many people, or if I can estimate how many people walk through your door as a store, I'm at least a little better off at understanding how your business is doing. Right? So UBS is using this data to make better decisions about purchasing or selling public market Walmart stock. I'd be surprised if anybody knows what this is except for the guy that's been to my talk. Anybody? It's close, close. So if you follow the financial markets in my in America anyway, the price of the market is actually heavily determined, or at least heavily influenced by the price of oil, right? And all of that oil in the U.S. is traded on the New York Mercantile Exchange, and all of that oil is stored in those tanks in Cushing, Oklahoma. It's hard to get a sense for how big that facility is, but just imagine, just in your head, that every barrel of oil that's traded on the New York Mercantile Exchange is stored in there. Now, the picture on the right was very hard to get, and you can kind of see, like, based on how ratty that picture was when I scanned it in, but that's a zoom in of the roof of each of those tanks. Okay, now, if you look carefully at that diagonal thing right there, if you were to like really zoom in or download these slides, you'll see that there's a hinge up there. The reason why that's important is that this roof floats. If I just look at the roof, I can tell how much oil is in the tank. Now, a company called Genscape flies a helicopter over those tanks twice a week to actually look to see what happened with those with that roof. Because if the roof is going down, I can assume that oil is being pumped out to the market. If there's more oil on the market, what happens to the price? Any economists here? It drops, right? And conversely, if I fly over that tank and I see the roof is a little higher, I could assume that either oil is coming off the market or that there's more oil soon available to the market. Either way, I have more information about what's happening. Now, this company, by the way, is also well known for placing, not only doing this, but also placing infrared cameras pointed at these tanks to try to figure out what's going on. On top of that, they're well known for putting electromagnetic sensors on the power lines outside the facilities to try to figure out what the facility is doing.
Is it legally allowed?
Say again?
Is it legal?
Absolutely legal. Now, Wall Street isn't alone. So if you have ever gotten auto insurance, home insurance, if you've ever taken a loan, this is very big in vitro fertilization and the lending behind that. The point here is that data is being used to make decisions about you almost any time that you are at risk to that loan or to that whatever transaction you're about to take. And the funny thing is that most people don't think about it, but this stuff's being used against you all the time. In fact, it turns out it's increasingly being used against you in the startup world as well. One of the most profound changes to the startup community, again, I'm tying up under the idea of data and transparency. One of the most profound changes to the startup industry has been AngelList. And the thing is, though, is that what it's done fundamentally is introduced a new layer of transparency between founders and investors. Now, the common argument in India and many other countries is, well, it's not really that good in my country. I call bullshit on that right now. Actually, in fact, I would say that any founder that is not doing well in AngelList is probably not communicating right. You're probably not pitching. What you need to recognize is you're not pitching the same to the investors on AngelList. You need to learn how they communicate, and I'll talk about that a little bit later on. But there's 90,000 plus startups, I think, last I heard on there. Thousands of investors. We are very, very active. We do every one of our deals on AngelList. But then there's these other data sources too, right? I mean, you guys, I would be surprised if you don't recognize some of, or if all of these things, right? The point is, if you just think for a minute, think about how much you individually interact with each of these services. By the way, I do expect you guys to be tweeting a lot about this stuff. I'll be checking afterwards. But the point is, though, is that all these data points exist. And the thing is, we are doing it. You see, the thing is that like I might be the loudest investor here right now saying data, India, yeah, right? But the fact is, if you just look at Correlation Ventures and Google Ventures, that's nearly $500 million ready to go. Now, if you want a piece of that, right? The point is that there's money available. It is increasingly data-driven. And I'm going to make a case throughout this of why that's forcing you guys to focus on traction even more than ever. So the thing is that, so now we've talked about startups and how they've changed. make no mistake about it, actually, that because startups have changed, the venture capital industry is changing as well. And this statement was, this was actually by Naval, who's the founder of AngelList, where he says that venture capital is open to attack by disruptive new business models in tech. And so the point is, early stage VC has changed. Now the state of the art in my industry is not very sophisticated at all. In fact, if you don't believe me, you don't have to, if you don't believe me, just think about every interaction you've had with an investor and count the number of times they've said, I think or I feel. Right? They say, I think, this is what I think about your business, this is how I feel about it, right? The point is, it's very fuzzy. And so, but that's changing. I think we are the last part of the private equity world that is adapting to the new reality of investing today. The underlying thing that's changing our industry, the VC industry, is that there's an unbundling of advice, control, and money. It used to be that when I would give you a check, you would probably come to me for advice. You would say, hey, whatever. And then because I'm like this egomaniacal, crazy investor, I'd tell you, this is what you're going to do. And then I would go get in my Bentley and leave. I don't have a Bentley, by the way. But the point is, though, is that there is this unbundling. And actually, again, if you don't believe me, look at how many investors you've met that now have a mentor network, right? And many of you that have raised money now probably didn't have to give up a board seat either. The point is that the industry is getting changed. We as investors are no longer useful. I think many of us in the industry are realizing that we're not founders and that we don't know enough to tell you what's going on. The other thing that's changing our industry is that it used to be about judgment, capital, and deal flow. It used to be that if I had some money, I would just put up a flag and say, I have money, and that would generate deal flow, and then I just had to be a judge and say, like, this one's great and that one's super, this one's shit. But the unfortunate reality is that, like, I don't know how to pick the next Mark Zuckerberg any better than you do. Right? And so the thing is that increasingly in my industry now, differentiation in venture capital it's about the access to the deal. It's really important that I be here as an investor, to be here with you founders. Because, you know, the paradox of investing in my industry is that we all want to invest in the best companies, the most high growth or whatever, right? But basic supply and demand, the best companies will be able to generate a market for their shares. In other words, the paradox of investing is I want to invest in the best companies, but the best companies don't need me. Do you guys agree? Right? So the thing is, it's about access. As an aside, by the way, I'm just going to say, my theory on why most investors are assholes is because the person that writes you a check is not the one raising money. Right? He or she doesn't feel the pain that you feel. You're sitting there like thinking, how do I actually raise money and keep this thing going? And that person, unfortunately, most times, is sitting there thinking, I wonder what my bonus is going to be this year. Right? And then and you can usually tell, right? Because they're dressed differently than you. They have like this really nice like Armani suit or whatever. And you're like, you haven't showered in 3 days or something. By the way, rule of thumb, 2 rules of thumb with 500. Don't pitch me, pitch Punkage. He's wearing the big 500 logo. He's our guy in India here. Secondly, definitely take a shower. I don't like that and he doesn't like it either. But the point is, though, is it's all about access now. I think what you guys as founders need to understand is that our world is not very different than yours. You guys have to raise money from investors and find customers, right? I have to invest money into my customers and raise money from my investors. It's not so different. In any case, I think increasingly in my industry we're switching to a checklist-based format, and I think these are sort of the things that we're looking for. In fact, these are the things we're looking for at 500. God help me if you try to pitch me and you don't have these things. But I think this, I feel really comfortable saying that this is pretty much what every other VC is looking for as well. Right? We're looking for a small but cross-functional team. I don't want you outsourcing. Right? I want a functional prototype before investment. I'm pretty sure, just anecdotally, I have to look, but I'm pretty sure last quarter we only did 2 deals that didn't have a prototype. But that was justified in those cases because the founders had significant previous experience.